Hi, and welcome to this week's episode of Come to Find Out. This week we have the amazing Brendon Bland from Neighborhood Loans. Anyone that's been listening for a while knows that I have him on quite a bit, and that's because he does such a great job at taking information that we all see in the headlines and read on social media and all the skies falling stuff that we read. He takes that and
Hopefully
he
not.
puts it. I know. Hopefully, it's not. But he always takes that and puts it in a way that everyone can kind of understand it. So, wanted to bring him on here to kind of give a market update and explain, some of the headlines we've been seeing. So, Brendan, thank you so much for taking time out of your day. I know you're super busy, but I appreciate you always making time to be on here.
Absolutely. I'll always make the time to be on here. I always enjoy it. And yeah, thanks for having me.
Yeah, of course. Of course. So I know, just recently we saw, headlines about the
Mhm.
Fed and cutting rates and oh my gosh, mortgages are going to drop and all
Yeah.
of these things. So I'd love for you to kind of walk us through because I know again, if you're not following his social media, you should, because he puts out such great content and he kind of, broke this down in such an amazing way. So I'd love for you to go ahead and just kind of walk us through like, the headlines. What does that actually mean?
Yeah.
And, what are we kinda seeing?
Yeah. First of all, I appreciate the plug. So yeah, feel free to follow me, follow Sarah online. I think we both do a decent job of putting out some timely information. But yeah, obviously as a mortgage lender, w- one of the main questions I get all the time is, hey, what's going on with mortgage rates? And when we look at things like at a just like a headline level, meaning like just literally with the top of the new, well, not the newspaper. Does anyone read the newspaper anymore? But you know what I'm saying. Like that, the headlines can give you a portion of the story, but certainly not the full story. And really, to kind of get context for what's going on, we need to dig a little bit deeper. So, recently, what a lot of people have been talking about is the Fed cutting rates, the Fed cutting rates. And, I don't think anyone would really care about the Fed, or most people wouldn't care about the Fed if they didn't have this perception that it was going to impact the interest rate on the mortgage of the house they are wanting to buy or wanting to refinance or something like that. So you have a lot of Fed watchers who otherwise would not give a crap about what they're doing. So for a lot of people, they just don't really know how the Fed functions, kind of what their function is in our country, and ultimately how it plays into what we care about which every day, which is borrowing money to buy a house. So at a high level, what the Fed does when you hear talk about the Fed adjusting rates, what they're functionally doing is adjusting what's called the Fed funds rate. The Fed funds rate, this is where it gets really really exciting. The Fed funds rate is actually more connected to short term debt, and it's really the rate at which big banks, lend each other money overnight. So so a lot of people are like, well, that doesn't sound like mortgage rates because it's not. That is not what's happening. So when you hear the Fed is either raising rates or is lowering rates, that does not inherently mean that mortgage rates for us as consumers are going up or down. So why do we even care about it? Like why, what because there is a correlation to what their activity, what they do, and what ultimately happens with mortgage rates eventually. And so as the Fed goes over time, we do see mortgage rates move, but they don't always go in lockstep. So that's a lot of background to kind of get to where we are today. So um, over the last, I'd say month and a half. Right now, we're at the end of September. We saw mortgage rates come down almost a 0.5%. So they were hovering, in the mid sixes. Let's say like 6.625, and then at one point they came all the way down to like a six and an eighth. All of that happened before the Fed cut their rate. There are two reasons why that happened. One, anticipation of the Fed cutting their rate. So, in the background with mortgage rates, um, the there's something called the mortgage-backed security market where people invest money into that, and those investors, they do like to see the Fed cutting rates, and there was an expectation the Fed was going to cut rates. And so in the lead up to that actually happening, mortgage rates came down with the anticipation of a rate cut from the Fed. Additionally, some of the things that investors in mortgage-backed securities care about um, are things like jobs reports and inflation. And right now, we're seeing a little bit of a less steady job market. And there's been reporting that's come out about that. And so, therefore, people who invest in mortgage-backed securities put more money into that market, and therefore mortgage rates came down. So, just trying to keep it as simply as possible. Um, a lot of times when we hear things that are not going great in the economy, we'll see mortgage rates come down because those mortgage-backed securities are safe investments. They're effectively guaranteed returns for these investors, and so anytime where there's uncertainty in the economy, there's always a kind of a flight to safer things, safer investments. So all of that has kind of happened over the last, like I said, 4 to 6 weeks leading up to the Fed cutting their rate. So that's the good news, is that mortgage rates have come down quite a bit here in the last month or two. But when the Fed actually did cut their rate, we saw mortgage rates go up a little bit. And so I think that's where some people are getting a little puzzled or confused. Well, why would, if the Fed cuts their rate, why would mortgage rates go up? There's a couple reasons for that. I think that the biggest reason is, once again, a lot of this is perception of what's going on in the economy. And so when the Fed cut the rate, they said, hey, yeah, we're cutting our rate. And a bunch of the people who sit on the Fed, there's multiple people who sit on that committee, said, hey, we do think that we're going to continue to cut rates, which once again over time would be great for mortgage rates. But the head of the Fed, Jerome Powell, when he gave his comments the day that they cut their rate, he was a little less optimistic, or a little about how many cuts the Fed's going to do and how frequently they're going to do it. And so going back to those bond investors, those mortgage-backed security investors, that was not welcome news to them, right? So that gives them a little less confidence in mortgage-backed securities, and therefore mortgage rates actually went up a little bit after the Fed cut their rate. So since then, I would say, once again, over the last, 4 to 6 weeks, we're in a much better place than where we were previously. Right now, the biggest thing that we're looking forward to is more economic data. That's really what's going to drive mortgage rates here through the end of the year, and into next year. So the two biggies that we're looking at are going to be inflation. So do we see inflation staying about the same, or do we see it getting better, or do we see it getting worse? If inflation gets worse, that's bad for mortgage rates. If it stays the same, that's okay. If it ultimately is getting better, that's good for mortgage rates. So that's one thing that we're taking a look at. Right now, the Fed has placed, mortgage bonds and mortgage rates have placed a bigger emphasis on the job market. So that's the other thing that we're really looking forward to, is what's going on in the job market. Once again, you know, we don't want to root for a not strong job market, but that would allow mortgage rates to continue to come down if we're seeing a little bit more unsteadiness in the job market. So, coming up here in October, there's going to be a report that gets released. It's a jobs report, and there are predictions for what that jobs report is going to say in terms of new jobs that are being created. So, if the actual result is that report or those predictions being correct, that could be good for mortgage rates. If we created less jobs in the economy than was predicted based on that report, that's good for mortgage rates. We would expect mortgage rates to go down. And if we created more jobs than expected, good for the economy, not good for mortgage rates. So there's multiple things that kind of at play that are going to continue to impact mortgage rates over, certainly through the rest of this year, going into next year. And so we kind of have to we got to keep our eye on the ball on all those things. And, once again, this can get, in this format we're talking, right now, we can kind of get a little bit more long-winded on it because, just because we have the time. But I think, ultimately it can get really confusing for a lot of people because there's just these little small things that are, kind of across the board that can have an impact. And we would just love to say, hey, what's the one thing we need to look at, right? Is it the Fed? Um, that's a portion of it. So, my prediction is that over the next year or two, which once again, it's a little easier to say over a course of a longer time frame. I expect that mortgage rates will continue to come down. Over the short term, it's a little harder to predict. Volatility exists. So, I've been sitting down with some folks this week who are looking to buy. I actually had I have a family who's moving to Columbus from Maryland, and they asked me. They said, "Hey, Brendon, should we wait to lock our rate? Like, do you think rates are going to come down a little bit more here in the next few weeks?" Um, and as much as I want to say yes, I think that's going to happen. In the short term, really hard to predict. We've talked about timing a lot in the real
Mhm.
estate industry and how that can be difficult. So, my general advice is if you're in the middle of a home search right now, um, and you're sitting down with your loan advisor and the numbers make sense where they are, I tend to be a lot more conservative, and I'm very big on, hey, let's take the scenarios that work, that we know work right now, instead of hoping for something to happen that may or may not happen in the short term. So that's kind of my general thought and advice for anyone who's looking for a house right now, or who's potentially thinking about refinancing right now. Once again, if you're in the money for a refi, and you're wanting to, maybe wanting to see what's going to happen here over the next 2 or 3 weeks, you could luck out. Things could get better, or you might see rates go up a little bit, and then all of a sudden, maybe the scenario that you're looking at today, you wish you would have pulled the trigger. It's hard to say exactly. I
Mhm.
just tend to be more conservative on those things. So, you asked me one question, and then I think I spoke for 15 minutes. So, I'm sorry about that. But hopefully that kind of gives people an idea of what, what's going on, kind of where we've been. And overall, I think the good news is rates have come down quite a bit. And I think, over the next year or two, they will continue to come down. Just it's the short term that's hard to predict.
Yeah. No, I love that. And I love that you break that down because I do think that it is kind of a misconception that when, the Fed is lowering rates, then that means mortgage rates are coming down, and it's actually kind of opposite of that because it's based on other things. So, it's interesting to me that, it's the job market, that kind of helps predict that whether it's going to go up and down and like inflation and things like that. So
Yeah.
I think it's very fascinating and I love how you break it down. So thank you for that.
Yeah, for sure, for sure. I know it's like one of those things. Like it is fascinating, but it also like sometimes when I'm talking to people, I can see their eyes start to glaze over. They're like, "Dude, just tell me what the hell the rate is. Let's go." So,
Yeah.
um, so I certainly I try to stay on top of it and help educate people as much as we can. But once again, at the end of the day, even people who have many more letters next to their name than I do, they're really just they're making educated guesses about what's going to happen next. So but I think understanding the why can help, especially if you're in the middle of a home search or thinking about entering one.
Yeah, I agree. Well, and I think it's interesting too. I think you and I both get that, that timing question. Like I'm trying to time the market and it's like you're never going to be able to time the market. Like there's always, going to be something and you're going to wish that you had pulled it sooner, or you wish that you waited or whatever. Like so, I love that your advice is very similar to mine. It's like if you can afford the house that you want now,
Yeah.
then get it now and then wait, and if the rates come down, refinance, and if they don't, if they go higher, you're
Yeah.
locked in. It doesn't matter. It's not gonna affect you. So,
Yeah.
it's just like, let's just focus on now. Does it work for you now? No? Okay, well then let's wait. Like, and
Mhm.
but don't wait because you're waiting for the interest rates to come down because, like you said, like we don't know when or if that's gonna happen. We'd love to say, I know you and I would both love to be like, yeah, absolutely. Rates are coming down. We're going back into the fours and it's
Yeah.
gonna be so great. But like we would just be lying to people.
Yeah, or like I said, just taking a tremendous wild swing guess, right?
Yes.
Yeah, for sure,
Yeah.
for sure. So,
Exactly.
but yeah,
Yeah. Yeah.
what are some things that I guess you're seeing? I saw the other day Columbus Realtors, they put out some data. It looks like a couple things I thought were interesting. Inventory is up
Mhm.
year over year. Home prices, of course, are up year over year. Number of transactions are up year over year, and then days on market are up year over year. At least that's what I think I saw that correctly. And it's interesting because I think some of those things you might not think would go together, right? You wouldn't necessarily think, okay, home prices are up and days on market are up, right? Like it it's an interesting time. What are you seeing on your side of the fence right now?
Yeah, it's interesting. I mean, I've had a few listings over the past few months that like literally, we like listed it and immediately it went into contract. But for the
Mm.
most part, I have 3 listings that are just sitting. And
Yeah,
like they're priced appropriately, like they're great homes. It's just, it just hasn't fit what
yeah,
someone's looking for.
yeah,
And so we're also seeing though a lot of people are trying to time that market. So they're like, well, I
yeah.
like this and I want to get into a house, but let's just wait and see if the interest rates go down. And
Mhm.
so,
Yeah,
like I think collectively as a whole, like anyone looking to buy has been thinking that way. Like, well, let's just wait. Let's, wait for the interest
yeah,
rates to come down and whatever. But also what we're seeing is with more inventory, back in 2020 through like 2022, when it was like a house came on the market and 17 people, minimum
yeah.
wanted to put an offer on that house because there was no houses. Now we're
Right.
seeing kind of, a little bit different. We still have a lot of people, looking for homes, but we have a lot more people that are putting their homes on the market. What's interesting though, even though you see that statistic that we've gone up and that we have more inventory, it's still very much a seller's market because we still don't have enough inventory to
Yeah,
actually fulfill,
yeah,
like to get to a
yeah,
balanced market, we would
yeah,
have to have millions more
yeah,
houses on the market.
yeah,
So,
yeah. More doesn't mean enough, right?
yeah.
Yeah, it doesn't mean, it just means there's more. So,
Yeah. Yeah.
um,
But, that's where with my sellers, I tell them like, "Hey, if you're wanting to make sure that you sell this, we need to, get it your house needs to look great." So, and do all the the finishing touches, any
yeah,
of the upgrades, things like that if you're wanting to get top dollar. But the biggest thing is just pricing appropriately. So
yeah,
if you're wanting to sell as is and your house needs a lot of work, then we are going to list it lower than what you could potentially get.
yeah,
But I think the biggest thing that people need to remember though is there's no exact science to it, and a house is only worth what someone's willing to pay.
yeah,
So a lot of times sellers will be like, well, my neighbor, like their house wasn't as updated as ours, but they were able to get like $20,000 more than we are. Like, why is that? Well, at the time, there was somebody that was willing to pay that. And now
yeah,
there's not someone that's willing to pay
yeah,
that. So it just, there is, unfortunately, you and I don't have crystal balls. So we can't,
yeah,
you know, tell them like listed at this and you're going to have, all these offers and it's going to be in
yeah,
contract in like, a day. Instead it's just really like, hey, let's put our best foot forward. Let's market it. Let's do what we can. And, let's let's adjust accordingly. So I think as long as
yeah,
people go into it with an open mind of knowing like, hey, we're going to start here. This is what I feel is the best, putting my best foot forward and then being willing to adjust, I think it's really going to bode well for people that are trying to sell in this market.
Do you? with your other realtor colleagues, are you seeing like how are the conversations going with sellers? Because I feel like on the buyer side, we're finally into a place where people are like, okay, we understand it's no longer 2021, 2022. Like, we understand that rates are not 3%. We don't like it, but we understand it. You know what I mean? I feel like on the seller side, I've still, heard at least, there's been a good chunk of folks who are still having a hard time accepting, like, hey, I can't just list my house for whatever price that, shoot, basically pick your number. And, how are those conversations going, do you think?
Yeah. Yeah, no, that's such a good point because yeah, buyers, I feel like for the most part, buyers are like, okay, it's not, 2020,
Yeah.
and which is good because they actually have time to like think
Right.
about, the
Right.
house, think about the offer, maybe even see it a couple of times
Right.
before, like writing an offer. Whereas back then, like you literally walked through and if you weren't writing an offer as you were getting in the car,
Yeah. You
you
weren't
weren't
getting the
even going to be
house.
considered.
Yeah.
So it didn't even matter.
Right.
And you were probably already going to be outbid, by 10 other people. So, sellers are a little bit different though because they look back at, sales from, 6 months ago, a year ago, 2
Yeah.
years ago, and they're like, "Well, these people got this much, why can't I, why are
Right.
you telling me I can't list it that?" And it's like,
Right.
"Well, because, even 6 months ago, it was a different market than what we have now." And so,
Sure.
anytime I'm pulling up comps, I'm only looking at a few months back,
Mhm.
to really just kind of show them like realistically, this is where I think we should be. And, like, don't
Yeah.
look back 2 years ago because that was a total different market. And, like that's just how it is. So,
Yeah.
I feel like for the most part, people are starting to understand. Most of them are like, yeah, okay,
Yeah.
that stinks, but I
Yeah.
get it, and then others are like, well, but that's what I want. And I'm like, I mean, if you want to, because again, it's up to the person selling it or buying it, whatever
Sure.
they wanna pay for it or whatever they wanna sell it for, so sometimes no matter how many conversations I've had with the seller, they're like, "Well, I wanna just try," and I'm like, "Okay, just
Yeah.
know that, in 7 to 10 days, if we haven't had any showings or we
Yeah.
haven't, we're like the feedback is saying that we're priced too high, I'm gonna come back to you and we're gonna do a price improvement." So,
Yeah.
I think it's just all
Yeah.
in how you set your people up, have those conversations, let them know, kind of what to expect and,
Yeah.
educating them on the market and how it's just different.
Yeah, it's interesting. I mean, kind of once again, I think I said it earlier. Like perception matters so much. Because like I was talking to another set of buyers the other day, and and they were like, "Well, hey, it looks like how home prices are going down. Like we're going backwards." I asked them, kind of what, where they got that from or kind of what they were thinking. They're like, well, I'm looking on Zillow or whatever, and I see, these homes where, there's a price improvement and, the sellers, reduced it. And so that means that, housing prices must be going down. And that is that a bad thing or what's going on there? And once again, I think it's a big perception thing, but, because what I explained to them is like, no, housing prices are not going down. What's happening is there are a handful of situations where people are having to adjust what they listed their home for. But if we look back at the value of that home, excuse me, that home over the last 12 to 24 months, 36 months, 48 months, however long it is, what most of these homes are selling for ultimately when they close, that home still appreciated in value. It still went up. It's just that where they started, maybe they thought they were going to be able to get a 15% bump, because that's what we had during COVID, right?
Mhm,
And in reality, they're getting that 3 to 4% bump, year over year. That's typically, what you'd see in a more healthy and balanced market. And so, yeah, I just think, yeah, there's a lot of, during any transition period, which I think we are experiencing right now in the real estate market. There's a lot of perception management that has to happen,
mhm.
both by us as real estate professionals, and then also internally. If you're someone who wants to buy a house or sell a house, like as well, like kind of doing some education yourself and understanding, okay, hey, here's the reality of where things are, and I understand what I kind of what I think, what I feel, but what's the market actually dictating right now? And so, yeah, just an interesting time, I think, from that perspective. It's always interesting in real estate, of course, but I think that's kind of that's really the for me what I'm thinking a lot about right now is the kind of the transitionary period from where we were in COVID to today, and kind of where we're heading. So, yeah, appreciate you sharing kind of what you're hearing on the seller side.
Yeah,
Cool.
absolutely. No, I appreciate that. And yeah, I think that, I still think that right now is still a good time to buy. It's still a good time to sell. Here in Central Ohio, like the data that you were talking about, we still are, increasing every year with,
Yeah.
with the prices, with average home prices, with days on market, yes, that did increase a little bit, but you're seeing that all over. But our days on market here in Central Ohio are nothing compared to, other markets
Sure.
around the country.
Yeah.
And, we do have that built in like 3 to 4% appreciation year over
Mhm.
year,
Yeah.
because we do have such a strong market here. So,
Yeah.
you know, it's not
Yeah.
just a tagline. It really is, like if it fits for you financially, now is the best time to buy and
100%.
sell.
Yeah, the other day I was talking to someone about this too, and because like they're like, "Hey, is now a good time to buy?" And here's what I've been telling my buyers is like, listen, I'm a mortgage lender. I get paid when people buy houses, so I'm going to say it's a good time to buy, of course, right? Here's the truth is, my buyers today have more choices than they've had in the last 5 years.
Yeah.
Um, so if you think having more choices is a good thing, then that's the market right now.
Yeah.
Um, is it the right time for you? I don't know. I don't know what's going on in your specific situation. And so it may not be the best time to buy for you, but I think right now buyers in this market today have more choices than they've had in years. And so that's kind of what I'm talking to people about is, let's look at all the opportunities that you have. And once again, from a seller's perspective, homes are still selling and they're still selling really with really good values. So, I just think there's opportunities on both sides of the fence. You just got to have, a good team and a good strategy, and position yourself well. But yeah, that's my 2 cents on if it's a good time to buy. I think there's just more choices now than there's been in a long time.
Yeah, I love that. I totally agree. And I know that you and I both are always, working with each person individually, and it's not a numbers game to us. Like our people are not numbers; they are people.
Yeah,
And I know that you and I both have had conversations with buyers or sellers, and just especially buyers, though. Just saying like, hey, let's look at your story, like what's going on right now in your
yeah,
life, and I know you and I both have had conversations with people where we're like, yeah, okay, like I love that you have this goal of like
yeah,
purchasing, but it doesn't seem like it's the right time for you right now. So like
yeah,
let's circle back in 6 months or whatever. And like let's work on XYZ and make sure that it makes sense for you because,
yeah,
like I said, people are not numbers to us. They are actual people living, lives,
yep.
and we want to make sure that they're setting themselves up for success. So
100%. Yeah, once again, that's I think one of the reasons we work so well together. And yeah, once again, I think we've said this multiple times in this podcast. We want to be able to sleep at night, right? So we want to
yeah.
make sure, yeah, when we're setting someone up, we're setting you up for success. So yeah, I think that's always the goal, right? And kind of just once again with everything else we just talked about, like getting a good team, getting a good strategy in place, getting educating yourself, and then you making the right decision for you and your family based on all that, all of those factors. And so, but yeah, we love to help. And hopefully, if you're listening to this podcast or watching this, this information is helpful.
Yeah. I love it. And speaking of information being helpful, Brendan and I also created a master course, a master class for first time homebuyers. And it really, like, we've taught the first time homebuyer class so much that I think each of us could teach the other one's
One.
portion. Um,
Yeah.
and we could probably do it in our sleep. But, if you're listening to this and you're like, man, this is such great information. How do I get started? What do I need to do? There's always a link in every description of the podcast. So even if you don't go to this one, you can go to any of them. There's a link in there that will take you to the masterclass. It is free, because we want you to get the information that you need so that you feel empowered on your home buying journey. So make sure you check that out. But thank you so much, Brendan, for taking time out of
Yeah,
your
of
busy
course.
schedule. I know you're getting ready to hop on a plane and get set away. So I really appreciate you taking the time.
Of course, anytime. I can do it in the air, if we need to. So,
I love it. I love it. Well, thank you so much. And thank you for tuning in to this week's episode. Hopefully, you found some of this information helpful. And, don't forget that there is that master class if you are looking for a way to just kind of understand the whole process. So make sure that you are liking and subscribing so that you never miss another episode. So we'll see you next time on Come to Find Out.